Let's get into it. We're going to talk about a rate cut countdown because the FOMC is happening tomorrow. You guys don't want to miss it. Let's just jump right into the show. I do want to thank our sponsor, and that is BTCC. This is a new exchange, or not a new exchange, but one that is new to our channel. You guys can get out there and get a 10% bonus on first-time deposits. So all you have to do is use our link down below. It's a special page for a sign-up. Get into it over there. They've got all sorts of sign-up unlocks, extra bonuses, and offers, all just by using the link down below. Check it out and get started with BTCC to get your trading going. All right, so tomorrow we will be doing the FOMC live, so make sure and check that out. We'll air that. If you're not subscribed to the channel, do that right now. Hit the little bell and give you a notification when this comes out. This is going to roll into the rate cut, which pretty much is a slam dunk for the quarter point, and there is no other, it does not look like there's another shot at this. The 50 basis points, very, very low. All of that happening right now. With that, you've also got the government shutdown, and this is everything from SNAP benefits suspension. This is getting much bigger, and it's going on for much longer than what I think a lot of people anticipated. Right now, the poly market on the government shutdown is ending. Look at this. This is going out all the way into January, end of January, 98%, December 31st, 95%, November 30th, 82%. So it looks like it's going to extend past Thanksgiving, which I think was the big target that everybody was looking for. With that being said, we have the dollar hitting a 1-week low. And of course, this starts to put a lot more pressure on the United States, obviously with what's going on with the United States and China trade deals, which is all bearing down on the US dollar and the Dixie, which puts more impetus on you guys to get out there and get into assets, which is why crypto is the place to be. Asset owners are winning. Combined asset value of major asset classes right now have reached a major record with 261 trillion. This is equivalent to 210% of the size of the global economy. So as you can see, everybody pouring into assets, gold, real estate, crypto, stocks, bonds, etc. All of that getting away from the dollar. And this has been a big one. Now, remember that Argentina, we did a big bailout on them. Well, they just won, Milei just won his party's election. This is a midterm election, so he's back there in office. But remember, this is Bernie Sanders. He's kind of going at the president on this. During the shutdown, Trump could find $40 billion to bail out Argentina, $300 million for a ballroom, and you can kind of see this is all of the Dems pushing hard to try to get the government shutdown done. With all of that happening, we also have issues going on right now around how China is playing out on this, because China is continuing to almost de-dollarize. Let me go to a clip real quick. It'll explain more. Take a look.
Now, in his first month as Treasury Secretary, Scott Bessent has been very loud about one specific thing, and that is that the United States has to take a bigger role in global markets again. In other words, he wants to slow down this chart right here. Remember this one? It's the chart that shows decades and decades of de-dollarization. So the goal is to defend the dollar's global role by helping allies stabilize their economies before China does it with the yuan, which we know will be backed by gold. But I don't think it's just about Argentina. It's also about the US fighting its war with China over the idea of what money should look like in the future. Because think about what's happening. China's getting ready to build its gold corridor, right? The node of vaults across Asia, Africa, Latin America. And they're literally creating a parallel financial system backed by their economy with a money that's redeemable for gold. And the US has also been doing kind of the same thing, but in reverse. So this bailout of Argentina, I don't think is some random act of charity, right? It's not altruism, and the president's not doing it just to be nice. He's doing it because it's supposed to telegraph to the world that the US still has that power to stabilize economies whenever it wants. China might be lending in yuan backed by gold. The US is now lending dollars backed by treasuries, right? And Argentina is sort of this test case scenario.
All right, so you can kind of see this does play out into kind of the gold versus digital asset space. You look at a few things here. Shanghai is gold warrants, digital certificates, all this proving ownership, especially around what Andre was talking about, and that is this new migration into gold as the core asset against the yuan. Now, how does this play out with crypto and how the United States is really leveraging in on stablecoins, because that could also play into this, where stablecoins, of course, are backed by treasuries. So there seems to be a balance of power that is playing out on the global stage, and I think that's what he's getting at with Trump. This starts to change things a lot. The only question, though, is why are central banks starting to leverage into gold? So you have this right here, global central banks now the most gold in this century. Granted, it's edging up, but it's not as high as it was back in 1980 when it was all gold. And this, of course, could immediately switch if we start to see the growth of stablecoins and digital assets starting to take place, which is why I think the strategic reserve plays into this, as well as the overall strategy of what crypto and Trump is trying to do. If you take a look at that, and here's Hunter Horsley coming in from Bitwise, he says in the next 12 months, every Wall Street institution will be doing something in crypto. Software is eating the world. Now, this is where it gets interesting, because if you look at Wall Street, still the center of the universe when it comes to finance. The fact that we're going on-chain to RWAs, real-world assets, tokenizing securities, this puts so much pressure on China, who is going to more of the physical and the tactile side of it by utilizing gold. All this could still leverage in on both assets winning in the long term. We just may end up with a kind of a bipolar scenario between the US and China, both leveraging in on two different asset classes. The other thing you got to look at is what's happening in the ETF side of things. Well, you've got Bitwise launching their Solana ETF, starts trading today, so that was a big one. And this is where you'll get direct exposure to SOL, so it's the first of its kind. The other thing that plays into ETFs is the number of them. And if you look at this is Balchunas, one of the Bloomberg guys, who focuses on ETFs right here, and he's talking about the very issue of Bitwise's Solana, Canary's Litecoin, Canary's HBAR, all this launching tomorrow. So you can see the acceleration. We'll see XRP ETFs, all of this playing into it. The real question is will the funds start to transition from the major capital in the market, or will we see it coming in from retail? And I think that's going to be the question that all this plays. Because remember, ETFs in the past have done something kind of unique. Remember, ETFs launched for ETH, and this was in July, and then it followed with a 40% correction. So the question is will Solana take the same track? Right now, it's about a 50-50 on the poll right there with just a few votes in, but some people think it's different now, but most people think this could see a retracement on Solana. Other things you got to look at, of course, is BlackRock. BlackRock is the only reason the Bitcoin ETF investments didn't turn negative in 2025. Institutional capital is the cornerstone. And if we're not getting institutional capital in Solana, could it go the way that we had kind of seen with early stages around Ethereum? A couple other points within this article. BlackRock's iShares Bitcoin ETF Trust received $28 billion in investments in 2025. Without it, the fund's spot Bitcoin ETF records would have been like basically a net outflow of about $1 billion. So a big difference in BlackRock putting a big flag in the ground around these ETFs. Let's take a look at this though, because Tom Lee is still very bullish, and this is a narrative that Tom has been touting for some time, and he's still buying ETH. He's continuing to double down. He is all in on Ethereum because he believes in not only the narrative, but he's got a conviction around this asset changing the world. Many people would say he's just going a little too hard here. This, of course, was Tom Lee talking about how the Mag 7 and crypto are rallying. And if you look at just what's been going on in not only AI, but just look at, in general, Bitcoin, Ethereum, this is just short term. Imagine what this could do in the next 6 to 8 months if we continue to see the pour in on assets. And I think that's the issue that Tom is watching right here. Let's go to a clip.
So Andrew Kong, I don't know if people saw this tweet, but it was titled, "Tom Lee's ETH thesis is retarded." He got about 1.5 million views. And basically his claim was that, yeah, look, it might be true that stablecoins are going to Ethereum, RWA is going to Ethereum, people, banks are going to use Ethereum, but they're not going to pay fees. Nobody's paying fees for any of this. This is all just a meme. And you should buy, robotics companies. I guess he's super big in robotics companies now. Do you have a counterpoint to what you saw coming out of the Andrew Kong camp, the doubters?
Well, as you know, in the crypto world, retarded is a good thing. So I took it as a compliment.
Okay, very good.
I'm ETHtarding.
There you go. Good response. That's a very good response. Wow.
I like Tom and his ability to kind of take it on the chin, because this guy has been right for the most part on a lot of his calls. The question is he right this time? I think everybody is waiting to see. But the new financial order is coming in hot. You look at Securitize putting out a tweet, tokenization, single greatest opportunity in all of finance. I would agree with this as we continue to see growth around RWAs in that market. One other clip I want to go to, because this gets into what are the ingredients that could spur a massive rally. Take a look.
Feels exactly like 1999. I don't know whether we'll actually replay it exactly, but I think all the ingredients are in place. Well, if you just think about bull markets, right, the greatest price appreciation is always the 12 months preceding the top. So that's the nature of a bull market. It kind of doubles whatever the annual average is and before then. So if you don't play it, right, you're missing out on the juice. If you do play it, you have to have really happy feet, because there will be a really, really bad end to it. And my guess is that I think all the ingredients are in place for some kind of a blow-off. Will it happen? Again, history rhymes a lot, so I would think some version of it is going to happen again. Right. If anything now is so much more potentially explosive than 1999. 1999, we were looking at a rate hike in November. Now we're looking at a rate cut. That fiscal monetary combination is a brew that we haven't seen since, I guess, the post-war period, early 50s, something like that. And that was crazy time.
All right, so that's Paul Tudor Jones talking about this, and then what he's referencing to is the dot bomb. And between 96, 97, and 2000, that was an era in technology that does have a lot of similarities to what we're dealing with right now with AI, crypto, stable coins, all the things that are happening globally. And then he is right. Now you apply some pressure coming in from the Fed on rate cuts, cycling into this. This will either be one of the biggest booms in our industry, or it could be a dud. Many people are trying to figure that out right now. If you guys are not subscribed to the channel, make sure and do that, because we'll keep you updated on all that good stuff. Hit the link down below. You can join our own Diamond Circle. Follow me out there on X, @Paul Barron. We'll catch you next time right here on The Paul Barron Show.